Welcome to Explain the Charts. Today we're looking at the GBPUSD and what's going on with it, both in the news and in the chart data. Let's start with the big picture, the daily chart. Here, we can see that GBPUSD has been consolidating around 1.31 for the last couple of days. This is a critical price level as it represents a recent high point. The recent bullish trend that was present on the daily chart is seemingly coming to an end. But before we get into the technical details, let's look at the news and see if there are any possible explanations for this. According to recent Google search results, GBPUSD is trading below 1.3200 after a bullish start to the week. The market is cautious ahead of the Federal Reserve's policy meeting, which is expected to result in a rate cut. The Fed's decision on whether to cut rates by 50 bps or 25 bps could have a significant impact on the GBPUSD's direction. With a 50 bps rate cut, the market is likely to shift into a risk-on environment, potentially boosting the GBPUSD. However, the Bank of England is also scheduled to issue its interest rate decision on Thursday. The Bank of England is expected to hold rates, indicating a more hawkish stance compared to the Fed. This could create conflicting pressures on GBPUSD, leading to volatility. Overall, the news surrounding GBPUSD is mixed and suggests that the pair is likely to be influenced by the upcoming monetary policy decisions from both the Fed and the Bank of England. Let's turn our attention to the 1-hour chart and see if it can provide any additional insights. Looking at the 1-hour chart, we see a very tight range over the last few days, with GBPUSD trading mostly between 1.3150 and 1.3200. This suggests that the market is unsure of its next move. There's also a bit of a bearish sentiment on the 1-hour chart, as the price action is mostly within the lower half of the consolidation. We can see some attempts to break above 1.3200, but they have been met with selling pressure. On the other hand, we also see a few attempts to break below 1.3150, but these were met with buying pressure. The 1-hour chart is painting a picture of indecision and range-bound trading, which is consistent with the cautious market sentiment we discussed earlier. Now, let's shift our focus to the 15-minute chart to see if there are any short-term opportunities. Zooming in on the 15-minute chart, we're observing a fascinating short-term dynamic. Here, we can see the price action is forming a classic flag pattern, a bullish continuation pattern. This pattern indicates that GBPUSD is likely to break out to the upside soon. The upper trend line of the flag pattern is acting as resistance, which is currently holding the price. However, if GBPUSD breaks above this resistance level, it could signal a strong upward move. This move could be further amplified if the Fed's rate cut is larger than anticipated, creating a favorable environment for risk-on assets. However, we should also be aware of the potential for a false breakout, which could lead to a quick reversal downward. A false breakout would occur if the price breaks above the resistance level and then immediately retraces downwards. Therefore, it's essential to be cautious and wait for a strong confirmation before entering any long trades. Now, let's recap the key price levels and potential outcomes. So, we've seen that the daily chart is showing a possible end to the bullish trend, while the 1-hour chart suggests range-bound trading, and the 15-minute chart indicates a potential breakout to the upside. Based on this analysis, here are the key price levels to watch. 1.3200 is a crucial resistance level. If GBPUSD breaks above this level, it could signal a strong upward move and a continuation of the bullish trend. However, if it fails to break above 1.3200, we could see a retracement back to 1.3150 or even lower. On the downside, 1.3150 is acting as support. A break below this level could signal a short-term downtrend. Ultimately, the short-term direction of GBPUSD will be heavily influenced by the monetary policy decisions from the Fed and the Bank of England. A large rate cut from the Fed is likely to bolster the GBPUSD, while a rate hold from the Bank of England could create some downward pressure. If you're looking for short-term trading opportunities, pay close attention to the 15-minute chart. Look for a strong breakout above the upper trend line of the flag pattern, confirming the bullish move. Remember, it's crucial to use stop-loss orders to manage your risk, especially when trading in a volatile market like Forex. I hope this in-depth analysis of GBPUSD has provided you with valuable insights. Remember to stay informed and adapt your trading strategies based on current events and chart patterns. Thank you for joining us on Explain the Charts, and happy trading!